All right, guys, this is going to be a decent length video. What I mean by that is probably going to be 15 minutes, 20 minutes long, but it is going to be a training video. This is specifically for my group, my stock market group, but I thought I'd give this one away as a freebie to everyone that just kind of follows me and is just kind of interested in the market in general. So bear with me as I go through this because this is a training for those of you that may not necessarily be in my stock market group. So what I wanted to talk about this morning is there is a stock called Gamestop. Many of you may have seen the stores. It was basically a brick and mortar store where you could go in and you can buy video games or rent video games or exchange video games. And that was sort of the premise of what the company did. Now, they were brick and mortar, and obviously we know what has happened to brick and mortar stores over especially the last year. But, you know, we've seen brick and mortar stores kind of go down. This stock was trading at $4 per share, July of 2020. Today, the stock is at $350. That's 7 months later. You've got to ask yourself what causes the value of a stock to go from $4 to $350. I have encouraged all of my students in my class to avoid what they call the short squeeze. So you're about to learn about shorting a stock and what a short squeeze means and why I recommend people to stay out of it. I'm going to show you what's going on, and it is the very reason or the very thing that almost knocked me out of being a stock trader some 15, 20 years ago. So I'm very passionate about this because I got caught up in something similar, not quite like this, and I was unknowingly caught up in it. And I want to show you exactly what is going on. No sound, no sound. Can you guys hear me? Kevin says I have no sound. Type in if you can hear me. Please tell me you can hear me. Please don't let me do this without no sound. Let's see here. Okay, all right. Some folks say they can hear me. Okay, cool. So, so here's what we need to do. I'm going to share with you what's going on, and then we're going to break this thing down. So let's go over to Yahoo, and I'm going to share my screen with you. And I'm going to go over to Yahoo and share the screen. Give me one quick second. All right. So here we are at Yahoo. The name of the stock is called Gamestop. You can see it right here, Gamestop Corporation. It is trading at $365 and going higher. What I want you to pay attention to is I want you to pay attention to the 52-week range. A 52-week range is what has happened in the last year. This stock has gone from $2.57 to $385. Let's take a look at the trend, the 5-year trend on this stock. This stock was just going along, and then all of a sudden, it just bam, okay? Now, remember what they do, okay? Now, for those of you who are not in my class, I went through the fundamentals of the stock. The stock does not have great fundamentals at all. There's nothing fundamentally that tells you that this stock should do what it's doing. If we look at the earnings per share, the earnings per share is a negative $4.22. A negative $4.22. So for every share that you own, it has a negative $4.22 of earnings. If we scroll down and take a look at the earnings here, you'll see that it beat earnings on Q1 of 2020. It missed earnings Q2 and Q3, and it just beat earnings on Q4. If we look at the financials, look at the revenue, we can see that the revenue has been dropping since 2000, from 2018, 2019, 2020. The revenue has dropped, and we can see the earnings, which is the blue here, the earnings have dropped as well. There's no reason why this stock should be doing what it's doing. So let's talk about what they're doing. So I'm going to share my face again. So in order for you to understand what's going on, it's called a short squeeze. That's what's happening. It's called a short squeeze. So let me explain to you what a short is. You can make money in the stock market when a stock goes down. Most people know how to make money when it goes up. You buy low, you sell high. Well, you can actually sell high, buy low, and make money when the stock goes down. It's called shorting the stock. So let's just say that the stock is $10 a share, and I believe that the stock is going to go lower. I sell the stock even though I don't own it. So I sell the stock at $10. I sell the stock to somebody for $10. My hope is that the stock goes down to $5. And then I buy it at $5. Okay? Because I sold it first. I didn't own it. I sold it. I know this is a hard concept. I sold something that I don't own for $10, hoping that I can buy it later for a lower price, and then I can make the difference. That's called shorting a stock. I have to buy the stock at some time. I'm betting that the stock is going to go down. I'll buy it at a lower price, and then I'll make the difference. What happens when you do a short squeeze is when you short the stock at $10, hoping to buy it at $5. So you sold the stock at 10. You don't own the stock. You sold it at $10. But then the buyers start bidding on the stock and make the stock go higher. So now you sold something at 10 that you're going to have to buy at some point because you didn't own it. You shorted the stock. You was hoping that you could buy it at a cheaper price and take the difference. But now this other group of folks are starting to buy this stock, causing the stock to go higher. Now you're going to be forced to buy that stock. What if the stock goes to $20? Well, you sold it for 10, and now the stock is at 20. You got to buy it. You got to buy the stock at some point. That's what's happening. It's called a short squeeze. So a company like Gamestop, everybody said, look, we're looking at the fundamentals. We're looking at the company, brick and mortar company. They've closed down. Everything is online and streaming now. And so they said, this company is going to go under. So they started shorting the stock. Well, you got this group of folks that came into this forum called Reddit. And all Reddit is a forum. And they got together, as a group of retail investors, people like you and I. They all got together and they said, we're going to buy GameStop and keep the stock going higher. Because we know that all of these people have shorted the stock and they got to buy the stock back at some time. So we come together collectively as a group and we're just going to buy and run that stock higher. So now as you run the stock higher, if I'm the guy that shorted it at $10 and now the stock is at $15, I'm already at a loss. And if it's keep going higher and higher, my losses are getting bigger and bigger and they're unlimited. The higher that this thing goes, my losses are unlimited. So what does that do? That forces me to buy the stock. Well, if it forces me to buy the stock, that causes the stock to continue to go higher and higher. Do you understand what I'm saying? So for all these people that have shorted the stock and these people that are pushing the stock up, they're forcing the people who shorted the stock to go buy the stock so that they can get up out of the contract, get out of the trade. And because more people are buying the stock to get out of the trade, it's actually causing the stock to continue to go higher. Okay? That's what a short squeeze is. Now, Why am I kind of tight about it? Because they are manipulating the market. They are manipulating a stock that is not valued at what is that. How do you go? I mean, let's look at that again. How do you go from $4 to $380 or $360 in 7 months? It's over 8,000% return. How, the company has not done anything that makes it 8,000% more valuable. So what's happening is that this stock is being manipulated. Now, let me tell you what happened to me 15, 20 years ago that almost knocked me out. I was in penny stocks. I was trading penny stocks. I would buy stock. If the stock went up 2 or 3 cents, I would sell it because I was buying 10,000 shares of a penny stock. I was in this penny stock. I don't remember what the price of the stock was, 25, 30 cents a share. And a group of people got together on a Yahoo forum and they started talking bad about this stock. And they just got together as a group and they started talking bad about the stock. And then that news started spreading. Now, it was fake news, but it started spreading. And so the stock started dropping. And I had bought 10,000, 100,000 shares of this stock, and it started dropping. Well, it dropped down to about probably 8 cents. And by the time I got to my computer, because I was out walking the dog and my buddy called me, by the time I got to my computer, the stock was like at 8 cents and I had lost $12,000 in a matter of probably 30 minutes. Walking out the house, taking the dog for a walk, I lost $12,000. And I was just in such a panic that I just hit sold. I sold. And when you sell, obviously you're going to lose, right? So I sold my stock, lost $12,000. I sold my stock, only to find that about 3 to 4 hours later, the stock was back at 25 cents. Here's what happened. That group of folks got together, put out this false news about the stock. It dropped the stock. Then they went in and bought it at a low price. And when they found out and people found out that the news was fake, the stock went back. So who lost? Guys like me. So this is what's happening here, is that there's no fundamental reason why this stock went up 8,000% in the last 7 months. Now, let's take a look at some of the news reports that's out here, because I think that's important as well for you to take a look at that. So here's Reddit. Now, Reddit is the forum where people get together. Now, it says the Reddit forum that's freaking out Wall Street briefly went dark. Reddit group, Wall Street bets is public again after briefly going private. And then Reddit's co-founder calls GameStop frenzy a bottom-up revolution, shifting power to small investors. That's bull crap. It's not a revolution. They are manipulating the stock. The stock is not valued at what they have it valued at. But because they got together as a group and they understand shorting stocks, they are manipulating the stock. Let's go on. Let's see. This is a picture of GameStop. You may have seen it in malls. They were in malls. They had brick and mortar stores. You guys know GameStop. Well, ain't nobody doing brick and mortar stores like that anymore. And very few people are buying games like that. They're streaming it online. So this is almost like the Blockbuster era for video games, and that is going away because everything is streaming online. So there's really not a reason that GameStop should be at the price that it's at. Now, my man Elon Musk tweeted GameStop a day or two ago on Twitter. And you can read what it says. GameStop jumps after hours as Elon Musk tweets out Reddit board that's hyping the stock. Elon Musk tweets helps fuel massive surge in GameStop shares. So Elon Musk tweeted GameStonk, STONK. Why did he do that? Because Elon Musk hates short sellers. I'm gonna just put it out there. He hates short sellers because people have shorted Tesla. And if you do some research on Elon Musk and shorts and people shorting Tesla, he didn't like that. He hates short sellers. Elon Musk and the SEC also don't have a great relationship. Now, what is the SEC? It's the Securities Exchange Commission. This is the organization that keeps the stock market, keeps you and I from losing our money and losing our shirts in the stock market because of people just gaming the system. So I know that this isn't going to last long because this is a game of the stock market. So the SEC can't do anything to Elon because he didn't say nothing about GameStop. Stop. He said GameStonk. But everybody knew what he was talking about, and it sent the stock higher, which everyone that shorted that stock, they're having a bad day, a really bad day, right? So Elon doesn't like him. Now, if you don't understand the history, then you might jump into something unknowingly. So let's go and take a look at what I mean. So you'll see Elon Musk, and you can go to Google, type in Elon Musk and SEC. Musk and the SEC have a combative history. Okay. See, when you are the owner of a publicly traded company, there's certain things that you cannot do. You can't make tweets and say things that make the stock go up or down or sideways or whatever. As a owner of a company, as a CEO of a company, a publicly traded company, you have a responsibility. And the SEC is there to govern, to make sure that that responsibility is adhered to. Now, I want you to know, I love Elon Musk. I love his drive. I love his company, Tesla. I love what Elon Musk stands for. But I cannot buy Tesla as a standalone stock. Because when you're, as an investor, when you're looking at a company and analyzing a company, you must analyze everything about that company, including the people who run the company. Elon is a rich man and he don't really care about money. How do I know that? I know that because of what he's done and his run-ins with the SEC, and the fact, if you guys don't remember this, Elon Musk went on an interview with Joe Rogan. He has a very popular podcast. Elon Musk went to Joe Rogan's public podcast and he publicly smoked weed on the podcast. Now, if you smoke weed, I don't care. I mean, I ain't got nothing to do with that. I ain't got nothing to do with me with you smoking weed. But if you are a CEO, if you are the head of a publicly traded company, and you go on an interview, a public interview, smoking weed, what do you think that's going to do to your stock? Your stock prices are going to drop. Now, for Elon Musk, it's not a big deal. But what about June Collier, who is an investor in Tesla? So that's the reason why I don't invest in Tesla straight up. And you might say, well, June, you're losing out. And so far, I have lost out by not investing in Tesla straight up. I invest in Tesla through an ETF. But I have a reason why I don't invest in Tesla straight up. Because as much as I like Elon Musk, I don't like the decisions that sometimes he makes as a owner of a publicly traded company, because he doesn't give a crap And that's fine, but you got to realize that you got investors, and you got investors like me, and I don't want you not giving a crap. If you smoke weed, I ain't got no problem with you smoking weed. Don't be smoking it on a public interview as a CEO of a company. That's just me. All right. So I say all of that, and I know I just went through a rant. I went through that rant because good people are going to get hurt. Small people are going to get hurt. If you want to know how it works, shorting a squeeze, watch a movie called Betting on Zero. Betting on Zero. It's on Netflix. And there's a guy by the name of Bill Ackman. He's a billionaire. And there's a company called Herbalife. Herbalife is a network marketing company that sells nutritional products, weight loss, shakes, that type of thing. Bill Ackman shorted Herbalife. And his goal was to put Herbalife out of business. And then there's a guy by the name of Carl Icahn, and what did Carl run? Was it GM? I think GM or something like that. But Carl was another billionaire, and he hated Ackman. And he knew that Ackman had put a big bet against Herbalife, $1 billion short on Herbalife. So Carl came in as a billionaire and just started buying Herbalife, making the stock go higher, almost trying to put Bill Ackman out. You got to watch it. It's called Betting on Zero. So guys, if you're out here and you are in the stock market and you're brand new, listen, this is the reason why I teach my class. I teach the fundamentals, and we look at good, solid companies based on their sales projections, based on their debt load. We look at companies the way that you're supposed to look at companies. This stuff that's going on right now, this is a manipulation of the market. And you're playing in waters with sharks. I'm not a shark. I got some money in the stock market, and I still think I'm a minnow. I stay over in the kiddie side of the pool. I don't go out in the deep waters where the sharks are. When you got billionaires out there and they're playing around with each other, for them to lose $500 million ain't a big deal. I ain't got that kind of money. So I'm warning everyone in my group, because people get excited and they say, man, this stock just went up 8,000% in 7 months. I want you to think about that for a moment. How does a company, what can you do as a company to grow your company by 8,000% in 7 months during a pandemic? What the hell did you do in 7 months during a pandemic to make your company go up 8,000%? You didn't do anything. It's manipulation. All right. I'm going to leave it alone. But this makes me mad, because this is the same kind of activity that almost took me out 15, 20 years ago. And I've been vocal on that to everyone. Anybody that knows my story, you hear me tell you that I lost money in penny stocks because of the same kind of activity where you get these group of people together and they do the opposite of what should happen. And it's not based on anything fundamental. It's just based on they're manipulating the system for a short period of time. So be careful out there. Make sure you get somebody that knows what they're doing. Make sure you get a teacher that's going to teach you the basics. And this stock has actually been restricted by, I know it's been restricted by Charles Schwab, Ameritrade. Some of the platforms won't even let you trade the stock now. I can't even pull the stock up on Market Watch, because everybody that knows what the hell's going on, everybody knows that this is a manipulation. And you can't allow people to manipulate the stock market like that, because now if you manipulate the stock market like that, it's going to be just like people don't trust voting now. People don't trust the vote. Now they ain't going to trust the stock market. They can't allow it to happen. So nobody that I know is a big fish that can play those type of games. So stay out of that. Trade the stock market the way that you should trade it. Look at good, solid, fundamental companies, because this stuff that you're seeing over there, those are big boys playing in a deep, deep ocean. And you a minnow. You are a minnow, and I'm telling the minnows to stay out of the deep part of the ocean. This is June Collier signing out. Somebody says, is that what's happening with AMC? You're damn right it is. It's exactly what's, who, you tell me who's going to the movie theater. I want you to drive by AMC on a Friday night. Right now, this Friday, I want you to drive by AMC and tell me how many cars in the parking lot. So when they push that stock back up, that's exactly what's happening with AMC as well. Be careful. Get you some good, solid companies. Get you some Microsoft. Get you some damn Apple. Get you some good, solid companies that they're not going anywhere. They got a good product. They're making money. They're solid companies. AMC, Gamestop, these other companies, they're manipulating the market. Now, you might say, well, I want to get in on some of that. Okay, get in. You might make some money. But I promise you, if you stay in those waters long enough, you're going to lose. You're going to lose. So that's all I got, man. I'm going to talk to y'all soon, man. I had to share that with you. Take care.